We're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. We saw some rand strength coming through yesterday, with dealers expecting it to maintain its gains and possibly make another attempt to break 775. That hasn't happened. We're sitting just below that 8 mark this morning. What's your view on the currency as we wrap this quarter up?
Well, we saw yesterday that the rand weakened to our initial upside target of 8 rand on the back of increased global risk aversion and market volatility. And both these factors are an indication of the deteriorating global growth outlook and the sovereign debt crisis. On the one hand, we had Fitch Rating Agency and Standard & Poor's downgrading New Zealand's credit rating, and we also had disappointing household data coming out of the US and Germany, and this morning's dismal PMI manufacturing data out of China, really inflaming those global recession fears. And if today's trade data comes out a little bit weaker than expected and is an indication of a deteriorating current account and balance of payments position for South Africa, we could possibly see the rand weaken further today. Even though we believe that the rand remains at the mercy of global sentiment, we could possibly see a move towards 820.
Of course, at the mercy of global sentiment and, much of that directive being provided by international markets, but it has been a busy data week as well. Those PPI numbers coming in worse than expected yesterday. What did you make of that figure coming through? Because what it has done is possibly reduce the chances of a rate cut that some dealers are still betting on.
Indeed, we believe that even though the PPI numbers have increased, as the previous speaker has indicated, we really need to see that translate into higher CPI numbers. And at this moment, we're only seeing an average of about 5% for this year. We do expect that the CPI will breach the target band towards the end of this year, but possibly come back towards the beginning of next year. So we don't really see much of that pressure coming through on the CPI front. And we do believe that the SARB will possibly keep interest rates unchanged at the November meeting and only start hiking interest rates towards the third quarter of next year. We're pricing in a 50 basis point increase in the third quarter in September next year, although we do believe that the possibility of rate decline is starting is quite embedded.
Quite embedded, especially if you're looking at that credit extension figure that filtered through. Yes, it came in better than expected, accelerating to 6.06%, but that on a headline basis. If you actually drill in here, the household category still showing that, lending has continued to slow down from 6.6% to 5.2%, and it's really the pickup on the corporate side that lifted that entire headline figure higher.
Yes, we do take consideration into those numbers, and that household data is really, if you look at household consumption expenditure is the main engine of the economy, and if that is starting to decline for the second consecutive month to 5.2%, as you mentioned, it is a big concern, and especially also if given the fact that the mortgage advances growth has also started to decline. It slowed to about 1.9%. For the month compared to 3% the previous month. So really the property market also playing a big role in where we see those credit numbers going. And we do expect, given the current economic conditions and the deterioration in the global economy, that credit extensions likely to remain pressured in the second half of this year going into next year. So we don't really expect very big numbers coming out for the remainder of this year.
What about the impact you see the event starting in about 5 minutes time having on the currency? South Africa versus Samoa, that Rugby World Cup match starting in about 5 minutes time. Shireen, how closely are you paying attention to that right now?
Well, we really do expect that the booker is going to really come in and favour us in getting us through to the quarterfinals. We do want to see them give Samoa a bit of a thrashing, but it's not likely to have any impact on the currency at this point.
Well, let's leave it there, Shireen. Thanks so much for your time today. Shireen Darmalingam, Macroeconomic Strategist over at Standard Bank.